This video explains how leasing a car or van changes cash flow, but does not remove the tax rules around private use. It starts with how sole traders and partners claim lease rentals, running costs, or simplified mileage. It then explains the 15% restriction for higher emission leased cars. The company pages cover VAT, list price company car tax, electric cars, and company vans. Finally, it shows the agreement type and full cash and tax cost to check before signing. Leasing can improve cash flow and create predictable monthly vehicle costs, but it does not remove the tax rules for private use. The result depends on the business structure, official emissions, vehicle classification, VAT status, and the exact agreement. A low monthly rental does not automatically mean the lowest overall tax cost. For a sole trader or individual partner, using actual costs, the business can normally claim the business proportion of qualifying lease rentals and running costs. The private proportion is not deductible. If simplified mileage is used for that vehicle, the 55 pence and 25 pence mileage rates cover the general cost of owning, hiring, or leasing it. Lease rentals and the same running costs cannot then be claimed separately. Most leased cars emitting more than 50 grams of CO2 per kilometre face an additional restriction. Broadly, 15% of the otherwise allowable lease rental is disallowed. The restriction does not normally apply to cars at 50 grams per kilometre or less, or to genuine vans. The business use restriction is then considered separately, where the lessee is a sole trader or partnership. Assume a sole trader leases a petrol car for £600 a month before VAT. The annual rental is £7,200. Because the car emits more than 50 grams, the 15% restriction reduces the potentially deductible amount to £6,120. If business use is 60%, the deduction is £3,672. A basic rate taxpayer saves £734.40 of income tax. A higher rate taxpayer saves £1,468.80. These simplified figures ignore national insurance and assume the deduction falls entirely within the stated tax band. Now compare an electric car or another leased car emitting 50 grams per kilometre or less. The 15% rental restriction does not normally apply. Using the same £7,200 annual rental and 60% business use gives a deduction of £4,320. The simplified income tax saving is £864 at 20%, or £1,728 at 40%. VAT is a separate calculation. Where a VAT registered business leases a qualifying car for business purposes, it normally cannot recover 50% of the VAT charged on the rental. The remaining 50% may be reclaimed subject to the normal rules. Optional services and maintenance that are genuinely supplied and identified separately can have different treatment. Vans generally follow the normal business use VAT rules rather than the automatic 50% car leasing block. For a limited company, qualifying lease rentals are normally deducted in calculating taxable profits. The 15% restriction generally applies to higher emission cars, but not to cars at 50 grams or less, or to genuine vans. However, a director's benefit in kind calculation is not based on the monthly rental. A leased company car is taxed in the same way as a purchased company car, using its tax list price and the appropriate CO2 percentage. Take a leased petrol company car with a £40,000 tax list price and emissions of 130 grams per kilometre. The 2026 to 2027 percentage is 32%. This creates a £12,800 benefit. A basic rate director pays £2,560. A higher rate director pays £5,120. The company pays £1,920 of Class 1A national insurance. A discounted monthly lease payment does not reduce that benefit because the tax list price drives the calculation. Now compare a leased electric car with a £50,000 tax list price. At the 4% electric car rate, the benefit is £2,000. The director pays £400 at 20% or £800 at 40%, and the company pays £300 of Class 1A national insurance. For a leased emissions-capable company van, unrestricted private use normally creates the flat £4,170 van benefit. A zero-emission van has a nil normal benefit, and a van restricted to ordinary commuting with only insignificant additional private use may also have a nil benefit. Private petrol or diesel can create the separate £798 van fuel benefit. Before signing a vehicle agreement, confirm whether it is a genuine lease. Operating leases, finance leases, hire purchase and conditional sale can have different accounting, capital allowance and VAT results. Compare the monthly cash cost, tax deduction, VAT recovery, personal benefit in kind tax, and employer Class 1A national insurance. Confirm the vehicle's tax classification and obtain advice on the exact agreement. For a tailored review of your business vehicle position, contact ABC Business Services. You can speak directly with a member of our team, email us to arrange an appointment, or visit our website for more information.